Difference between operating as a self-employed and a limited company. If you come so far, you are really up for learning and educating yourself about nitty-gritty of taxes. However, if you haven't watched my previous videos for content creators on record keeping, sources of income and allowable expenses, tax planning operating as a self-employed, tax planning operating as a limited company, please to watch these. It took over 100 hours of research to record these videos, and I am pretty sure and confident it will save your time as well as add value to your knowledge. The first difference is obviously tax rates. If your profit is less than 50,000, then tax rate for self-employed will be 20% and for limited company it will be 19%. However, if your profits are more than 50,000, then tax rates for self-employed will be 40% and for limited company tax rate split into two categories. Under 50,000 tax rate will be 19% and profits over and above 50,000 tax rate will be 25%. And even if we consider only the tax rate at 25%, then it will help you to save your tax bill on 15%. So there is a clear difference of 15%. So you should consider your tax rates while making a decision whether you have to operate as a self-employed or as a limited company. Next one is pension contribution. So if you are operating as a limited company and contributing into your pension pot, for the limited company, pension contribution is an allowable expense, which means it will reduce your taxable profit and ultimately your tax bill. However, in the case of self-employed, if you are contributing into your pension pot, it is not allowable expense, but you will get the tax benefit of the contributing into the pension pot if your profits are more than 50,000. As I have already promised to you guys, I will record a separate video on pension contribution. So in next couple of weeks, you will find a pension contribution video for content creators, and it will definitely help you and save you time as well as add value in terms of your knowledge and understanding. Number third difference is extracting or withdrawing a profit in more tax efficient way. As we have discussed in our tax planning for limited company, that there are two things that you have to consider while extracting a profit from your company. Number one is PAYE, pay as you earn, and number two is national insurance contribution. So the best way to extract a profit from the company is optimal combination of dividends and salary, which we have discussed in our previous video, limited company or tax planning for a limited company. You will find a link up there. And the next one is professional image and liability protection. Operating as a limited company has a different vibe. If you introduce yourself, I'm working as a self-employed, whereas in your introduction, if you tell I have a company, we provide these services, same thing, but the impact is different. So in terms of liability protection, if you are operating as a self-employed, you are exposed to your personal assets, which means if your business goes bust or is dissolved or bankrupt, so you have to sell your personal asset to meet business expenses and liabilities. However, in terms of limited company, you don't have to sell your assets to meet business expenses and liabilities. The only amount that you will lose in terms of limited company that you have invested into your company, that's it. And the final difference is, and this is I would say is the most crucial difference, I don't think so people often tell to other people while setting up a limited company, which is administrative burden. As a self-employed, there's nothing much you have to comply with. You just need to file your tax return once in a year and you have to disclose all of your sources of income on that, and that's it. However, on the other hand, limited company brings along a massive administrative burden. Every single year you have to file company accounts, you have to file tax return, you have to file confirmation statement, plus you have to file your personal tax return to HMRC. So these are 4-5 things which increase definitely your administrative burden, plus it will increase your cost in terms of accountancy fees, because accountants will charge you filing a confirmation statement, they will charge you for filing accounts to company's house, filing accounts to HMRC, HMRC, filing your personal tax return to HMRC. So definitely it increases your admin responsibilities, plus it will increase your accountancy fees. Overall, in this video, we have covered 5 differences between operating as a limited company and as a sole trader or self-employed, including tax rates, pension contribution, efficient ways of extracting a profit from company, professional image and liability protection, and the final one is administrative burden. So this was a series of tax planning for content creators. Now the upcoming videos are pension contribution for content creators, difference between state pension and private pension, calculating use of home for content creators, VAT requirements for content creators, and then followed by question and answer session for content creators. Thank you very much for watching. Your support in terms of your constructive feedback, likes and comments. As always, hand ahead salute until the next video.